Hey, welcome back, subscribers, to my world of stocks. We've got a very interesting update today on NVIDIA's $4.3 billion stock portfolio because in the latest quarter, this coming from their 13F filings, the most up-to-date information that we have on their portfolio, well, it showed that there was only one single stock that NVIDIA has been buying, and it also makes up over 90% of their entire portfolio, and that is in CoreWeave, ticker symbol CRWV, which, by the way, that stock is also down over 50% of its entire value from the top. So in today's video, we got to take a closer look at this one for ourselves and see if maybe this is an AI stock that we should also be buying here at these lower levels too. So I'm going to run through the business for you. We'll talk about their ties to NVIDIA, why the stock has been crashing, and whether or not I plan to buy this stock myself anytime soon. So without wasting any more time here, let's just go ahead and jump straight into it, my friends. Now, who is CoreWeave to begin with? What do these guys do? Well, they're essentially an AI infrastructure company that owns and operates a bunch of data centers across the US and Europe that they then lease out to customers, allowing them to use these data centers remotely through the cloud, along with all of the GPUs that they house within them, which currently sits north of 250,000, and they are then used to run all kinds of different AI workloads. So if you're a company that is, excuse me, that is trying to do a bunch of stuff with artificial intelligence, but you don't have all of the expensive hardware and equipment to run it yourself, well, then you can just pay a company like CoreWeave to use all of their infrastructure instead. Now, as extremely useful as that sounds, though, it's actually not a very unique business in the market. In fact, there's a ton of competition in this space that even includes some of the biggest tech giants in the world, like Amazon, Microsoft, Google, and more. However, CW does do at least a pretty good job, I would say, of differentiating themselves by offering more specialized and custom solutions at also more affordable prices than their larger rivals, which has been working pretty well for them so far. Last quarter, for example, saw skyrocketing revenues that more than tripled in size year over year, driven by rising demand for their AI cloud platform. And while the company is technically not yet profitable on net income, they are at least generating positive operating income, which more than doubled year over year, while adjusted EBITDA also rose by even more, tripling in size to positive over $750 million. More importantly, though, the company is still carrying a gigantic revenue backlog of more than $30 billion worth of orders, which was up a whopping 86% year over year, driven partly by the nearly $12 billion deal they signed with OpenAI, as well as another $7 billion signed with Applied Digital. And those are, of course, big AI companies, so a big vote of confidence from them there as well. And also, by the way, half of that backlog is due over the next 2 years. So it should actually be a meaningful contributor to their growth right away and help kind of relieve some of that pressure that they've been feeling on the bottom line too. And look, over time, if this company just continues to head in the right direction like this, like they have been, then they could easily be a top AI choice worth investing in. It's definitely a business that is seeing a lot of demand right now, and so the future does look very bright for them at the moment. Having said that, though, despite the strong performance in their business, it seems to have not been enough to please investors who've been more concerned about the rich valuation ever since IPOing just earlier this year, back in March, where it quickly rose from around $40 a share all the way up to over $180, where it then proceeded to crash by over 50% once the hype died down, losing over half of its entire value from the top. And again, my opinion is that it was just too expensive at those higher levels to begin with for what is, again, technically still an unprofitable company on a GAAP basis, and one that is operating in a likely a bit of inflated AI market that is driven by a lot of hype and future promise right now. Because you look at the valuation today, and even after that giant crash, their market cap is still sitting north of 40 billion with a price to sales ratio above 12, which is still very expensive. But hey, back in June, it was even higher than that, where the market cap sat around double the amount with a PS ratio closer to 30, which is extremely high. So yeah, it was just way too expensive at those levels, much too high. And so it did need to correct back down in a big way, in my opinion, which it obviously has now. So with that in mind, going forward now, how attractive is this stock after this crash? And is it worth picking up here? Well, again, the business is on fire right now. And more importantly, their bottom line should also see even greater expansion than their sales, which would really, or at least as a growth rate, and that should really help drive down that expensive valuation once investors do start trading it based on profits rather than sales. For example, when you look at their EPS numbers from last year, well, they reported a loss of more than $4 a share. But then you look at this year, analysts are expecting those losses to get cut in half, then get cut by like 3/4 of it next year too, and then actually turn positive all the way up to nearly $2 of profit per share in 2027, at which point their forward price to earnings would sit at around 46, which, don't get me wrong, it is still expensive. But if their EPS numbers keep improving as dramatically as they have been, as analysts are expecting to, by such large amounts every year, then I don't think it's too crazy to think that that PE ratio could actually get cut in half the year after that as well, which would be much lower than the current sector median of around 30. And that's probably why, on average, analysts actually hold a price target that is 22% higher than where the stock currently trades today. Now, my only issue, though, is that I just think that they're pricing in almost everything going right for the company and their business and then being able to execute, which, don't get me wrong, I do think that that's actually very possible, especially given their deeper ties to NVIDIA, who, by the way, is also, a giant vote of confidence, holding billions of dollars in the stock themselves. But just as important as those investments is their actual partnership that helps differentiate CoreWeave from some really intense competition, where they've repeatedly shown, at least so far, to be among the very first to offer NVIDIA's latest chips, like providing Blackwell GPUs earlier this year, and even the Blackwell Ultra update more recently too. The reason why this matters so much, though, is because companies are all competing to be at the forefront of artificial intelligence. So getting early access to the best and highest compute power available can sometimes be a game changer for your business. Time will tell if this remains the case over the longer term. But my suspicion is that with NVIDIA investing literally billions of dollars into CoreWeave, I think they have plenty of incentive to keep helping them with as fast product releases as possible. And that's really driving up demand for CoreWeave, so much so that they are even acquiring now Core Scientific for $9 billion just to get full control of their data center infrastructure and be able to keep providing these products and services at scale as they grow larger in size. Although the recent price drop in the stock is putting some pressure on that deal because it was an all-stock deal, but I still think it'll ultimately go through. Anyway, the point being that as long as CoreWeave keeps doing what it's doing and is able to execute, then I think the stock should perform well long-term. But having said all of that, is the stock a buy right now immediately at this price? Well, I think for you guys, it really depends on your risk tolerance, right? And what you're looking for specifically in a stock. If you're more of a growth-oriented investor who doesn't mind the volatility, acknowledges the risk, realizes that, you could lose some money on this, but you want a big play in AI, you want a big name here with a lot of future potential, one that has the backing of NVIDIA, which is a huge deal and could really benefit from the booming trend in artificial intelligence over the long term. But, rather than buying a name that has already skyrocketed in price, you want something that has been falling so you can get in low, potentially benefit from that big rebound that they could have in the future. It could really take off, get some big gains. You're that type of investor looking for the biggest, kind of growth opportunities out there. Then yeah, this is a stock that could make sense for you, especially, if you just acknowledge that it is a little more speculative, a little riskier, and if that's what you want, that this name does make sense to me. However, if you are more of a cautious investor these days that is, a little worried about the economy, feels things are a little shaky out there, feels that maybe there's a lot of hype in artificial intelligence right now, sees it as maybe a little more of a bubble that could burst at any moment, then maybe going with an unprofitable name like this, still, technically unprofitable on a GAAP basis, maybe that doesn't make a whole lot of sense. Maybe you want to go with something safer, you know, acknowledging that this is a company that is going to be having to compete with some of the absolute worst companies in the world that you would ever want to get stuck competing against, like Amazon, Microsoft, Google, and more. So maybe you want to go with one of those names instead and just, play it safe that way. As for me, I'm a little bit kind of in the middle, I would say. My gut tells me that right now is probably a good time to dip my toes into a stock like this. And actually, like a lot of things they're doing, I even like the acquisition of Core Scientific, because I think over time, that's going to help them own more infrastructure to cut down on lease expenses, which will actually help increase their profitability and drive the valuation down further. In the short term, it could lead to more expenses, but over the longer term, I actually think it's going to benefit them and could really help with that rich valuation too. So I see a lot to like about a name like this. The only reason why I'm not buying it yet myself is because I just have already so much giant exposure to pretty much everything that CoreWeave does. I mean, I own so many cloud and other types of AI stocks in my portfolio to the point where the ratio is just getting a bit overwhelming. I think I'm overexposed to that area. And so adding another name in this kind of same space like this just feels like it would be a bit too much. But I will certainly be keeping a very close eye on it. I could very easily be convinced to just buy this stock on a whim, just on a random day. If the feeling is right, if someone just kind of convinces me to do it, I could see myself picking up the stock, especially if it keeps trading this low. And if they continue to execute, they put out some good numbers, they work their way towards more GAAP profitability. Yeah, this is a name that I would not mind at all owning, but it's just not something I need right now. I don't really need the added risk either, because I have so many stocks that give me so much potential for AI as it is. So yeah, unfortunately, it's a pass for me at the moment. But hey, that's just me. I'd love to hear how you guys feel about this. Let me know down below. Is this a stock you own? Is it one you're considering buying? Or is it just too risky to touch? I could easily understand an argument on either side. So let me know and we could have a conversation. But either way, I hope that you enjoyed the video. And thank you so much for stopping by, my friends. I hope that you're all doing well out there. And I will catch you in the next one. All right, take care, everybody. Bye-bye.